The Bank of England are meeting next week, and at the last interest rate meeting, Bank of England's Cunliffe held back against the idea of hiking interest rates out of fears that the UK consumer would be feeling the price pinch too much, and the risk was that the Bank of England would be hiking interest rates too fast, too soon. Now, at next week's meeting, the Bank of England face even harder challenges. And in this video, I'm going to explain to you why the Bank of England may actually not hike interest rates next week, and what you could look at in terms of trading opportunities and which currency pairs are worth looking at ahead of the Bank of England's meeting. Now, this is the sort of data that's going to worry the Bank of England. You can see here on Friday the 22nd of April, there was a big miss in the UK retail sales print. You can see that the headline figure was minus 1.4% month on month, below the minimum expectations of 1%, and the year-on-year figure was 0.9%, which is below the minimum expectations of 2%. So it was a miss across the board. And at the last central bank meeting from the Bank of England, we saw a dovish hike. And the split was 8-1 on hiking rates by 25 basis points with one dissenter. And that dissenter was Bank of England's Cunliffe. Why did he dissent? Well, it was because he was concerned that consumer confidence has fallen due to the squeeze on disposable income for UK households. There's rising taxes in the UK, higher energy prices, as much elsewhere in Europe and the rest of the world, increasing food prices, and all of it's just adding extra burdens to UK households. And some of the poorer households are struggling to cope with the cost of living. Council tax, gas, electricity, food, communications, fuel, and many more basic items have increased costs. That's what's worrying the Bank of England. So they don't want to be the cause of slowing growth. But yet at the same time, the headline inflation for the UK is at 7%. So they're having to have this balancing act between controlling inflation without slowing growth. And it's a very tricky balance to get. Now, that's the UK side of the currency pair, the euro pound. So there's negative pressures on the pound at the moment. Now, if you look at the ECB, now it's a little bit more complicated with the Eurozone because there's been sort of quite mixed data points. But inflation is high, and the data print on the 29th of April showing that the core inflation for the year on year came in at 3.5% above the maximum expectations of 3.4%. This is going to worry the ECB. They're much more likely to need and want to hike interest rates, perhaps now as soon as June. Now, the expectations are that the ECB may be hiking around July, but this high inflation print will worry the ECB. And again, just like the Bank of England, they're trying to balance this tricky balancing act between hiking interest rates to control inflation without slowing growth. So it's very difficult for them to do it. Now, some of the PMI data out earlier in the week was pretty strong, and there's sort of mixed data points out there for the Eurozone. Some of the German confidence took a big beating as well this week on obvious concerns about the Russian-Ukraine crisis. So there's a whole balancing number of risks. Now, in terms of the Bank of England decision, we are anticipating potentially a more dovish hike. Now, ING have got a very helpful base case. Now, ING's base case, which I think is very helpful, is they're going to see a 25 basis point rate hike, 8-1 vote split. But they're going to reiterate the more modest hikes coming and risks either way. Bank opts against starting active gilt sales, inflation revised up, but negative economic growth now expected. So, in other words, they're going to sort of do another dovish hike, which should keep the euro pound supported. So that means any dips lower in the euro pound ahead of the Bank of England do look like worth buying. Now, a couple of things to be aware of. There are a few other members in the Bank of England's board that are worth talking about. So you've got Catherine Mann, Silvana Tenreo and Haskell are all dovish members of the MPC. So, could one of those join Haskell, join Cunliffe? It is possible, particularly if that sort of weakening consumer confidence, concerns over soaring energy costs, you could see that making some of the more dovish members nervous. But remember, they've also got to control inflation, and pretty much the only tool a central bank has to control inflation is rising interest rates. So it seems more likely that the Bank of England will hike again, but start signalling they're going to be more dovish. Now, all of that should be supporting the euro pound, because there's a couple of ways to enter. Now, at the time of this video, you can either enter at market with stops like just underneath that 83.50 region, or, and this is the ideal, so we've got a deep drop down to 8,300 ahead of the Bank of England meeting on Thursday. That would be an ideal place to enter, and stops can just be placed well out of the way underneath 8,200. But there's the two options. So the short-term opportunity would be at market, just stops underneath 8,350. More longer term and a better position would be a buy on limit around 8.3 with stops underneath 8.2. Again, this is not trading advice. It's simply trying to take advantage of the potential divergence between the ECB and the BoE, and just demonstrating how someone might go about doing that. As always, manage a risk very carefully. Okay, folks, that's the video for the Bank of England meeting on Thursday. Could be a very interesting one. I'll just leave you with the ING base case. It's a very helpful template and really helps map out the low and the high potential ranges for the euro pound on the BoE decision. If you like this video, please give it a like or a thumbs up or a share. It's always appreciated.